Welcome back, everyone, to Chaikin Analytics. We're here to talk today about finding exit points for longer positions, as well as finding opportunities that you can short and profit from, perhaps with trading options. Our first example today is for longer term positions, and what we're going to use is for AIG. So this is a stock that had a very strong run in the first half of 2015 and eventually ran into turmoil along with the rest of the market with the correction back in August. But if you held on to the stock, you might be wondering, is there still growth potential with the stock? And what we find toward the beginning of 2016 is that as the stock struggles to stay above its long-term trend, you want to think about exiting a position. Now let's remember the power gauge rating here. It's a stock that throughout its growth was mostly bullish. Obviously went down to a neutral positive rating here during the correction when it dropped below its long-term trend, but has since really recovered its bullish magic that made it such a strong stock to begin with. So the lack of your bullish power gauge rating, as well as the price dropping below the long-term trend, are signs that you no longer are expecting growth in a stock. Now, Chaikin money flow, you're seeing the indication that institutions once hot on AIG are starting to sell off and are now in negative territory. Relative strength, the stock, how it's performing versus the overall average market, you can see is starting to depreciate and finding itself in negative territory. Your ideal opportunity is to look for an overbought position to exit a stock as it's rallying. Here we are back on December 30th with all the technical factors in favor of an exit, and of course you're in an overbought position here. Now this leading into, of course, further depreciation in your stock prevents you from experiencing more losses, and now here you are, if you're holding on to the stock still, you're running into a relative strength sell signal. So that's an example for selling out at an overbought position when you no longer have a bullish stock on your hands. How about short-term examples? Let's go ahead and take a look at DVA here. So I'm sure many of our subscribers are trading options and you're looking for an opportunity that you can short. So DVA is a great example of a very consistently classically bearish stock, well below its long-term trend, and with a bearish power gauge rating picking up momentum. Now again, same trends. You can see institutions trying to prop up the price, eventually going down to negative territory. Relative strength, same story, underperforming the market. The big difference here is that with AIG, that's a stock that was breaking out and experiencing growth. What you're seeing here in this case for DaVita is clearly a bearish stock that is anticipating depreciation. With the help of our overbought sell signals, you can identify clear opportunities to not just, perhaps if you're holding on to the short, exit it, but also open a short position or perhaps trading with a bearish example. A bearish options trade. So you see this back here in November, as well as again back in December. Now, if you're wondering what opportunities do I have in order to short a stock, or what's the best way I can maximize my trade, consider options play here. Our program that allows you to compare a variety of different strategies side by side, and you can see whether shorting a stock, buying a put, or as you can see with options play today, doing a put vertical here would give you the best bang for your buck. So thank you very much for watching this video. Best of luck out there, and we'll see you next time.